What's up, everybody? Good morning. Ready for a nice and fun market day. Market's opening rational in between these CD bands. I can have a lot of issues today with that. Still above this triple B on the VIX. We're gonna have volatile overshooting pivots on our major techniques here. We're gonna build positions instead of jump in. Big Microsoft and was it Microsoft and Google today? Big earnings day. Visa as well. This is that day that kicks off major earnings. So this is all aftermarket. This is gonna be the big mover. Do we believe we're still bullish or bearish in the tech sector? We'll have to see and find out. That's consumer confidence numbers come out about 30 minutes as well.
Hello from the children of planet Earth.
It's gonna be a pretty big day. Let's just jump right in. Time to get rolling. All right, let's see. Right out the door, we're opening at the bottom. The redistribution zone resilience is pretty decent. Could be a long setup right out the door, through the half gap and to the top. Let's see if these liquidity maps come through and see what we find. All right. So right here, we're going to look for half gap to be support for a long. Right on this bounce. Resilience is good. So quick long, right out the door. Just a couple of contracts. Just a couple.
Hello from the children of
Oh, there's a head treasury reg at 454. Okay, be very careful here on this one. Let me double check. Okay, we actually are opening below head treasury. Let me reconsider this one then. All right, mean reversion again in these sandwich days. Just a couple contracts, yeah. I'm going to do maybe 3. Keep it there, just something small. This is mean reversion trade, so again, not bullish, not too bearish. So inside of here, 54 break to middle. If DD comes in nice and bullish, we're going to trade right up to the top of the box. Bull zone, bear zone, about a 10-point split, so it's not really a big run up day. Like, it's basically the same kind of trading days we had yesterday. Hopefully with some VIX decay, we'll see the market move. Okay, let's go ahead and let me do. All right, what's up, everybody? All right, let's go. Let's get QQQ. The monthly map. If there is no monthly options or we don't have data for it, then nothing will show up. Let me try to run it. What do you get? Do you get a little status up here at the top? You try to run your monthly map, Dorel. Okay, we're looking at BSU on Q, the BSU on QQQ. We are actually below. So bull zone support to the middle. This is a special liquidity map. 378, bottom of bull zone. The middle is right here at 377.5. So that midpoint is going to be a nice little spot for this to convene at. So there's a little dash line between blue and bottom bull zone. So 377.5 is that target. Any breakthrough here goes to hedge. Obviously, hedge to hedge trades are always pretty good. Limited upside, but still not too terribly bearish. DD's coming in pretty positive at 87. So nice cleanup day again. No volatility, no anything crazy. All the alerts are cool. It's almost like gold setup. Keep an eye on resilience, though. Make sure that resilience stays positive. S&P's pulling a little bit. Hopefully doing pretty good. IWM's looking really good today. Okay, it's BLU and IWM. Do hedge pressure on top of each other. Let's see what we got here. Let's look at some bull stocks today. We have a new feature that is hedge pressure and MHP equal each other. We can actually search for those. Starbucks, ExxonMobil, those are like right at the launch point. We do keep the history of those. We just don't display them yet. At some point, we will when we do our historic data and backtest release. It'll be there. It's just right now, all the energy's been focused on getting live trading going. So we're going to do like this huge optimization project that's going to optimize the platform at the same time as presenting historic data. Yep, I know. I'm pretty excited about it. Right, clean, easy day. Long on SPY out the door for me. I'm on the ES. That's mean reversion. I'll probably just trade the middle, take some profit, call it. Pretty clean. We get DD band to the middle. Remember, we get consumer confidence. Going to be a nice catalyst. So a lot of times, one of the tricks is trim out a lot of my position before the catalyst comes through. Trade into the middle. Yep. You're right. So every time we're getting the future stuff ready to go. Tiebreaker of liquidity pocket is DD. DD is bullish, so right from the middle, trading to the bull zone is my trade today. Absolutely nailed it. Resilience is just bouncing around. We're outside the zone. Resilience is still positive. Everything's looking pretty solid. These irrational rules, breaks to the upside, I always like to take. Wait, what I don't know. TSM. It's showing up on mine. XLP. Sometimes we may not have all the options data, so let's see if we have something for this. I'll have to check. How's my trade doing? Trades are doing pretty good today. So when this little red arrow comes up, no data received, it's like we didn't get data for it. So sometimes we'll only have monthly options data instead of weekly options data. So you click monthly, you'll be able to see at least something. I really don't know what's going on here. Give me 1 second. I need to refresh or reboot my platform because we have a new hot fix just put out. Cool. What's up, everybody? Make sure y'all smash that like button while you're here. Everybody do it real quick. Second guy. Sorry about being a little quieter here because I'm trying to figure out something. All right, let's see how our trades are doing today. Consumer confidence in 13 minutes, still hanging out. QQQ breaking through hedge pressure to the top side, looking great. All right, still hanging in there. SPY running up to bull zone. This is a pretty quick and easy trade. Consumer confidence in 10 minutes, and it's sometimes wise just take a little bit of profit if you know before those events happen. So a lot of times you get a little bit of a trade, take a little bit of profit on the way up there. I think I'm up almost to where I want to be. That DD band taking us to the bull zone is pretty good. So what I'm going to do is trim just a little bit. So somebody's saying, all right, sorry, talking about future stuff really quick. SPY res. Yeah, res is still looking good, so we're still on top of the box. All right, seeing a little bit of profit. Okay, it's a pretty easy trade out the door. Resilience positive, opening half gap, trading through the mean reversion towards bull zone. It's about 9 minutes till consumer confidence. I went ahead and just took all the profits. Really, at the end of the day, 455, that upper tap on that bull zone tap is part of the. Let me guys show you really quick on the cheat sheets what I'm looking at. Let's pop up liquidity pockets. Let's get some over here. You guys want to see in the Discord, we have a section called cheat sheets. It shows you how all these things work. It's a pretty textbook day. Wasn't too hard. Figured this one out. I'm sure y'all had no questions about what I was doing. Liquidity pocket. Mean reversion liquidity pocket loves the middle. Illiquidity pockets hate the middle. Say we're in a liquidity pocket. Loves the middle. Send in the middle. Once you hit the middle, market's typically random. Opening out the door, resilience today was greater than 0, which is our indicator at the bottom. It dipped slightly below 0 for a little bit and recovered right out the door, but we're opening outside the band. So if you're outside the band, the top of the band is support and resilience is bullish. There that is, super clean, nice and easy. Gosh, it's like, listen, it's 20 minutes of work and I'm done. Could be done for the day. DD ratio bullish, right? Opening in the middle or trading in the middle. Expect the bull zone tap to be the highest I look for. Either case, not super bullish. It looked like closed out right before there's some red candles coming through. Man, it makes me feel so smart at this. God. All right, what else am I supposed to do now? Oh, we gotta wait for the consumer confidence numbers to come out. Even so, with large earnings today, right? VIX, by the way, here's another thing to take into account. My bad. I'm showing my TD still. Hold on. My bad. Here we go. Ready? Let's go here. All right. Let me repeat. Get your cheat sheets out from the Discord. In liquidity pocket, it hugs the middle. And right now, you can see we're trading in the middle of a liquidity pocket. Super clean. We're outside of the redistribution zone box, everybody. So when resilience is greater than 0, resilience is greater than 0, as you see at the bottom indicator here. Top of the box is support and trading inside of that. Top of box is support and the gap is likely to hold. So we're doing good there. Bullish DD, again, trading in the middle. Look for bull zone taps. And that bull zone tap is coming out now. The consumer confidence number is coming out. 5 minutes away. I'd be stretching just to get another 3 points. Pocketed $600, called it a day. Pretty textbook. Yeah, this is an easy Fair to expect us back in the bear zone. It's hard to say because we have big earnings today. But keep note, with this VIX in decay like it is, VIX finding lower lows is a pretty decent sign that we're going to be trading up today. There's very little fear going to the Microsoft, Google, and Visa. We starting off major tech earnings today, which is the big thing. The Nasdaq is pegged out. So we're going to see if that really means anything. Okay, 1 second. That's that white box that you see.
Trade in there.
Yeah, so the bottom of the box, like from the slide, when you do the resilience class, you'll learn about that one. So at the bottom of the bull zone, the bottom of the box, you use resilience to pivot through it.
In the middle.
Yeah, and we made a Russell resilience. We have one now. If you get the cheat sheet. So positive resilience, the middle pivots through the box, the top of the box bounces off the top of the box. All right, what do you guys have? Morning map, pre-market prep. Do you use Zax for the chart? Yeah, I use Zax for my earnings. Wait, for a chart, for a possible short squeeze, but can I find that chart? No, I use Zax for earnings. My pre-market setup is this. I have my liquidity map here. I use Financial Juice as my news aggregator. I have my economic calendar, so I can come through here and know which events are coming up in the day. There's just some other data points I was looking at. Zax to look at earnings, so which major earnings we have end of the day, beginning of the day, and the commitment traders is my traditional. Now you see the shorts are starting to short again, by the way, and the longs are starting to long again. Liquid market on COT. This is still going up. This is great. Super great. I'm excited. Nasdaq about the Tapididi band. As a matter of fact, take a look at the top. Even though I closed my position, not really feeling, too sour grapes about it. Nasdaq is finally just made that final rush to fill up that last little move. And we could actually sell off today. So let's just be very careful. Anything can happen, right? You have big earnings. It's going to go one way or the other. So the question that you should have is, what do you think earnings are going to be like? Because that is really the telltale sign. Let's look at the QQQ monthly map, give you some predictions, right? So the monthly map works is that you can see, and let's just kind of draw the major areas of interest. You can see Nasdaq starting to get very weird and scattered. This is unusual. And so we're going to see what's happening. And let me give you an easier one to analyze before we do the Nasdaq. Let's look at the S&P and show you that the monthly map is showing a stable bull market. The way that it works is you're looking at the bottom of the bull zones. Now you have to kind of dig them out where I'm kind of drawing here. The major bull zones kind of like floating in here. A couple of splits, but let's take the closest one to a major bear zone. You can see right here, like that. When the bull zone bottom is trending lower, that means there are more bulls at a lower price. The bulls are getting stronger, more longs, more people are bullish. The top of the bear zone, the same way as you see, is trending down. This is the monthly map. We'll do a class of monthly map today. So when the top of the bear zone is sloping down, it means people have to be shorter at a lower price, and there's fewer people short at the same price. So the bear side is weakening. Okay, so what you see right here are people becoming more long and then shorts getting squeezed. That's what it means. So it's a double strength rally through October. The S&P is looking clean. I'm talking like clean. Doesn't get any clearer than this. Now it's going to be volatile. As you see, volatility is starting to pick up. The space between the zones are getting bigger, and you're having a lot of illiquidity pockets poke their way in. This is new. People are finally starting to throw some bear pockets in there as well. One may argue that this is a second forming bear zone, which is very, very possible. It's still lower. It's less squeezy than this one. You can see that it's still in a bear squeeze sort of thing. Oh, my bad. What am I doing? Okay. Why do I keep showing that? Ay, my bad. Okay, sorry, my bad. Okay, so you do the bottom of the... Here. Right here. Oops. Thank you for letting me know. I'm doing like 20 things at once. Daddy hasn't had his Addy yet. Still asleep. I'm Papa Bear of trading. That's why I call myself Daddy. Right here. Bull zone. Lower bull zone bottom means people are longer at a lower price. More bulls from here to here. This is October. If you just kind of trace the top of the bear zone. Now, again, you can one may consider this as well. Either way, the bears also slipping down means the bears are getting weaker. There are fewer bears at each price, and their bears have to be at a lower price to also sustain bearishness. So this is a twofold squeeze. It's double power to the upside, which means a nice clean rally still through October. The market is not bearish whatsoever. Okay, and now inside of here, the spaces indicate volatility. So as you see, like the market's not even volatile to the end of August. It's nice and stable. It's so weird. Going through earnings season, like it's just going to literally just drift through earnings season with no volatility. Volatility starts to pick up here, and that's where you're going to start to see your sell-off weeks. So it just waves up. I mean, it's basically like this. Probably the wave down, some chop, and then it tops off in October. Easy peasy. It's positional data. Can't argue with that. There you go. Sorry about that. I'm doing a bajillion things this morning. QQQ gets a little more interesting, and as you see these 0 days, right, they're getting very choppy. This is what happens during earnings season. You can see how there are just positions all over the place. Big bets all over the place. And there's bull, bear, bull, bear, bull, bear. It's all over. Well, let's look at the major sections to make it seem a little bit easier here. Major section of QQQ, you see that? I'm just tracing the bottom of like the bigger bull zones. You can see that as the bull zone is sloping higher, bulls are going to be taking profit as indicated by Qs having some down days, right? So I'm expecting the Qs to kind of maybe sell off a little bit or at least be volatile. Let's look at the major bear zones, right? Let me argue that is good. I'll check this out. Volatility for maybe 2 weeks through earnings, and bears are exiting, bulls are exiting. So it's going to be both sides trimming. So it's as much of a bear squeeze as a bull squeeze. So it's going to be a wider. So the way you analyze that is that you tell yourself that this is going to be a wide volatile week. If both sides are leaving, it's a thin, choppy market. So it fans out. Higher highs, lower lows. And then whatever it does from this point forward, it clearly pivots and stays bullish again. Indicated by the bull zone strengthening and the bear zone weakening. When these things both slope down, it's a very strong bull market. When these things both slope up, it's a very strong bear market. Exactly here is where NASDAQ pivots in the middle of September. Y'all see that? This is how you look at this. So, Rocket Scooter literally changing the entire world of retail trading. I've been using monthly maps since last year, since October's bottom, and I've been a strong bull ever since. And I walk in every day and I stare at this thing and I go, well, this is when it turns bearish again. In September 15th that week. It's like a no-brainer. And actually, let's take a look at another short-term bearish spot here to here. From 1st to 3rd week of August. Also bearish weeks, right? These are going to be weak, thin weeks. And then strong bull weeks. Kind of like both, right? Volatile. You still understand the monthly map? Dude, it's very easy, okay? When both point up, it's very bullish. When both point down, it's very bearish. When both fan out, it's volatile. When both pan in, it's liquid. It says 4 things you learn on a monthly map. It's where bulls are stationed. It's like the easiest way to see it. Here's an example. Let me show you something really cool. Say that like this is the price that we're trading at on QQQ, and nobody changes a damn thing at all. Literally at all. Okay, like nobody trades, nothing, and time just goes by. And QQQ sits at exactly this price. Right? And as you see, we're just floating through, floating through, floating through, floating through, floating through. And this exact price is sometimes bullish, sometimes bearish, sometimes bullish, sometimes bearish. If you're here, it's bullish. If you're here, it's bearish. Right? So it's kind of chop, 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 chop. And all of a sudden, at this point in time, the clouds go away. And Dorothy sees the fucking Emerald Castle in the background. You find the yellow brick road and you skip ahead because from this point forward, this price is bullish for the rest of eternity. From this moment in time, because everywhere in here, it's in a bull zone, this price. So what it's saying is, as time goes by, this market at this price is bullish. If you see it like that, right? And if today, say the market dipped today and sold off, I would consider that bearish. And as long as if nothing else happened and everything froze, it's in a bear zone, bear zone, bear zone, bear zone, bear zone. Wait, that same price is now bullish again. Not bullish. And then from this point forward, that price is also bullish. So markets can dip, but over time, there are people that want to be long at that price in the future. So the market could collapse here today and be very bearish for a little bit of time. And then all of a sudden here, it's no longer bearish. It's liquid in a liquidity pocket again. Then over time, it becomes slightly bullish again and then not bullish. So the idea is that time, and the reason it's hard for people, don't beat yourself up about it, is because when you learn technical analysis, you learn how to read charts like a baby. You don't think two-dimensionally. You learn how to read on the surface. It's historic data. Here's, and that's everybody. This is trying to forecast and add time as a second dimension to your analysis. If normally what you do is you try to forecast where price will be, right? Or when price will pivot at reading a chart. But now what you're doing is you're saying if price is held constant, what's time going to do to the equation? You hold price constant and then move through time, and you see this price is very bullish. As a matter of fact, you know how bullish this price is? You've got in the money calls from all the way from 340, 350, 360, 370, forced to long QQQ, even here at 378. Imagine that you sold calls for this date at this strike at 340. Those calls are very in the money. And as you approach that, sometime between here and here, you, the call seller, are forced to long the underlying because your calls are in the money. Whoever bought them from you can exercise them. So say that you sold 10,000 340 calls for September 15 as a call, so you naked sold them. Clearly, they're in the money. And as time goes by, between here and here, you're going to buy 100 shares per contract, right? So you're forced to buy 1 million shares. At some point between here and here, you got to market long 1 million shares. Because your calls are in the money on the state. So between here and here, you're more bullish. The underlying, your long position increased by 1 million. Because when that bull zone slopes down, there's somebody in that boat that's going to be forced to long those shares at some point in time between now and then. Does that make sense? That's why we say when the bottom of the bull zone slopes down and the current price at that point in time, somebody's forced to long 1 million. So between here and here, the net long increases by 1 million. This person's not going to not acquire those shares at some point over that course of time. You see how that works? So the idea is that between here and here, look at all the people in the boat. All of these calls are in the money now. All the people on this date between here and here, as long as this is active, they're longing the entire time, the underlying, which will drive the price up as their calls are further and deeper in the money. The closer you get to here, remember, when calls are out, when you're losing, theta removes money from your pocket, right? You're punished the longer you wait to act on balancing out your trade. If the market is bullish and you have in the money calls and you need to long the market, the longer you wait, the higher price you have to go out there and buy them in case your options are exercised. And you're assigned the position of shorting or selling to that person that bought your calls, right? So as time goes by, this person needs to rush and get them sooner rather than later. And everybody in here that sold calls is in the money. All the puts are out of the money, so nobody needs to sell. Monthly map adds that second dimension. So the idea is that as price goes straight forward in time, at this price, there's more people are in the money, so more people have to long. At this point in time, there are fewer people in the money, relatively fewer people in the money. So while there are still calls in the money, there's going to be fewer bulls here than here. This longer bar, more people, more bulls in the money. If strikes all the way down to 340 and 350, you're going to have to long. 340 and 350, you don't have to do anything. So you can see monthly map a bunch of ways. That's the way to explain how it works. But the idea is that if you're in a bear zone, you're going to have bear liquidity maps. If you're in a bull zone, you're going to have bull liquidity maps. And the idea that time can show people's sentiment change is the biggest and most important part. I didn't even look at the consumer confidence number, and these came out. Y'all me talking. Boom. Let's see what we got. Hit that like button while you guys are here, if you don't mind. We call this a non-event. So when the market doesn't, let's see what it is. Consumer confidence, 117 off the charts on a forecast of 111.8. Consumer confidence is one of the major predictors of consumer spending. It's one of the things that can repair the consumer discretionary sector, as people are more likely to spend money on things they don't need rather than just things that they do need. It's an overall indicator. It looks for consumer optimism. So at the end of the day, ridiculously large beat. As a matter of fact, the last two consumer confidence numbers are moving higher. Now, again, like I said, I mean, I feel like I can't wait to see what the bears on Twitter have to say about that. They're probably going to call conspiracy. They're probably out there sharpening their point on their tinfoil hats. Let's go. let me go throw a passive aggressive comment on Twitter. Let's go. There's a suggestion to animate the changes over time. Did anyone do this? I mean, we're building live trading in futures. Yeah. So here's the thing, right? When people have a suggestion of something y'all want, I rip out one of my own teeth, put it under my pillow, and have the fucking tooth fairy make it free overnight, dude. Every time. You know what I mean? Like, it happens when you snap your fingers. Just kidding with you, man. But what we do, you know, we have project schedule. It's in there. Trust me. And so we got to make the stuff we got to make, and then it's in the project schedule. So as we make stuff, we have to go in order of, like, you know, the way it works. You know, I love you. It's the best thing in the world, though. I agree. Animating this would be fucking cool. Problem is, here's the problem with that. Trading View, we can't do that. It's going to be easy. We have to actually go get a whole new charting library. We explore some of the things we do. Trading View has limitations on what we can and can't do inside of it. It's high probability, or feasibility on that's almost immediately impossible to do that animation utilizing Trading View. However, Papa Bear does have a solution for you guys. It's going to be a very hard, it's going to be a very cool thing to switch to that. It's going to be a very long project, though. Yeah, I know. No, I don't think anybody can, like, it's really hard to do in Trading View because it doesn't have the ability for you to, like implant a slider on here, grab it, and move it. A project like that would be months of work, but it would require a whole change of the charting library and everything else. Ideally, what he's saying is, I'm going to put something in here, grab this slider, like it'd be like an overlay. I would grab it with my mouse, click it, and then drag it to the right, and it would animate the monthly maps. Like, they would move up and down to show historically how they move up and down. As you see, the one thing we have to do is we have to take the history of the monthly map, create a timeline for that history, and then animate that history as you drag a slider. And the limitations in Trading View library, charting library is the best trading library on the planet, or charting library. It would be a tremendous feat to build that, and it's going to be something we do. Absolutely. But it's not something like when you're like, did somebody do this? It's like the project would be months of work, and we'd wake up and Trading View would be gone. Eventually, that's what we'll have to do to achieve some of our bigger dream projects. Just because the library doesn't let you just go in there and, like, rip everything apart and customize every part of it. They maintain the integrity of what the Trading View charting library actually does. I can't go in there and change a lot of the stuff, which is important, you know, because they're a licensor, which is completely understandable. But with the limitation of that, we can't come in there and create infinitely inside of their sandbox. There are walls, and it kind of makes sense to pivot at that point. So ideally, yeah, we would do it one day. I don't know if somebody volunteered to make it for us and help us make it. I'm all about volunteer workers. Somebody says you might use that one. It would be nice to, like, and as a cosmetic thing, to, like, click this slider and drag it. That'd be dope, right? I know, Ralph, this is like my favorite ideas, dude. I'm glad that you brought it up, though. Do screen captures and assemble in Premiere, not create feature in Rocket Scooter? Oh, let's see. Yeah. Oh, you know, Ralph, I owe you those videos. Man, those videos from last week. I need to upload all those Zoom calls. That's my bad. I owe you a steak dinner next time you're in Houston, man. I know I promised I'd upload them. I haven't done it yet. I'll do it today. Okay. You understand monthly maps, though? Is that pretty easy how to figure that out? Right here. QQQ is a little, and you can see that, like, while there's a lot of things appearing in the middle, one of the tricks is just look for the major zones, like where the lines are drawn. That's kind of like identifying the major zones. This is just going to show a lot of volatility, and these are illiquidity pockets built into the middle. But in reality, you're looking for, like, where those major zones are drawn like this. But you can see once we get through tech earnings, which is here, QQQ is bullish as fuck, right? That bull market just builds right back in. That bear market jumps right out. So what I'm going to expect is that QQQ might have a wave or two down, but it's going to continue to rally. I mean, we're going to 450 Qs. That's my call. We're going to 600 SPY by the end of the year. Not 500, 600. See, that's where I differ from most people. I think at the 400 level, most people on social media, here's what I like to call the psychology of bullishness. Once markets start to pivot, people still have that feeling that markets are bearish. We knew in October markets were bullish, and I made a tweet. I said, this is the bottom. Exactly where my mouse is. This is the bottom. Genuine buying through the new year, and it likely doesn't get bad again until the summer of 2022. And when we were approaching the spring, or 23, I actually changed my thesis and said, we're going to be bullish through October because the monthly map came through. I made another tweet and said, emergency newsflash. Monthly maps have shifted to show bullishness to October. So in October, we said summer would be the lower lows or the problem. And in spring, we said, nope, it's the fall now. So we're inching along 6 months out, still forecasting a bull market. So here people were like, okay, 380, 390, 400. And right about here at the 390, I said we're going to 5. At about the 410, I said we're going to 6. So, and every bear in the world is screaming at me every step of the way. Well, here's the thing, right? The market, right? We floated on a 13-year rally on QE, no rate hikes, the Fed pumping the market up. Yes, I understand that. Does that mean the market crashes when we go to QT? No, we're fully realizing most of the effects of QT this year. There's still, I don't know how many trillions of dollars in the Fed balance sheet still needs to roll off, but still, and these are treasuries, right? Let's imagine what's more powerful, Fed Treasury liquidity from Fed Treasury roll off, or I don't know, a growing bubble in the AI boom. I mean, let's just remember what markets are like. Stupidity and bull bubbles outpaces, you're going to quote me a little sticky note. Stupidity and bull bubbles outpaces Armageddon. Like, that's a sticky note for your computer. Like, the 4 horsemen could be like galloping over your fucking city, raining down fire and brimstone, and you'll still be buying, oh, Google, long Google, let's go, AI, because you will. People are just that way. It doesn't matter. Bull bubble stupidity, the fear of missing out, is the most prominent thing in the stock market. Doesn't matter how bad things look. Literally, God himself can tell people, I'm about to blow up your planet. Somebody says, yeah, I don't know. I don't believe him. I think I'm still going to long the stock market. That's how humans are. We're dumb. And so at the end of the day, bull bubbles will outpace even Armageddon. They will. People, it doesn't matter how bad things are. Humans love to look for any sign of hope, and they latch on for dear life to that one thing. And economic data is actually not terrible, so it's even good enough to support real bullishness. And the asset managers are pricing this future decent market in. Now, I know earnings forecasts for this quarter have been revised to be a little less optimistic, which is giving us beats across the board for a lot of these companies. But still, when you really read about it, I mean, consumer confidence is up. People are very hopeful for recovery. But it doesn't mean that a bubble's not forming. So here's the thing about the bear market. I'm going to time it right. I'll probably be the first bear in the world, just like I was the first bull in the world. And I'm going to do it at the right time. As a matter of fact, when people are the most bullish is when I'm going to step up and finally see the bear side of the market. Is this QT a big problem? Absolutely. Are the interest rates a big problem, and inflation a big problem? Absolutely. I mean, are these things going to create a longer term recession? Absolutely. But not in 2023. Maybe in 2025 or 2026, we'll enter a stronger recessionary period. But this post-COVID AI tech boom, that's enough to crawl us out of recession now. You're going to be in recession for a couple years. The part about trading is not about being right. It's about being right at the right moment in time. You're wrong on your timing. You're absolutely wrong in your trade. So just have to think about how people are bearish because fundamentals, or they pick a fundamental reason to be bearish. But in reality, you just follow where the positions are, which is the secret of Rocket Scooter, and then it'll tell you exactly how everybody's positioned. And when the asset managers, which is this green line, are becoming longer and longer and longer and longer and longer in futures every single month since I called the bottom in October, can't you see that there is a little bit of power in predicting using positional risk alone, not technicals, not levels, not whatever you used to do? Literally on this day, when I say this is the bottom, genuine buying, the asset managers become more and more and more long futures from that moment in time forward. There's a way we read this stuff to help you predict that. Rocket Scooter plus this together allows you to see what is. And this green line has not shown any waves of selling. People are longing and holding their long and becoming more and more and more and more long. Until this green line starts to pivot down, there's nobody selling the market. And this big short that's been wound up over the years is getting squeezed further and further and further and further as the months go by. They're further upside down in their loss. And what happens when they're further upside in their loss? Well, they squeeze and get out of their bear positions, which is exactly what the monthly map shows you. So that wound up short position in the S&P is about to roll out as fast as you've ever seen. This is going to be one of the strongest bull runs you've ever seen in your trading career. And you heard it first here, because look what happened to those bears as they flee from that short position between now and October. That's a huge wound up short that every moment in time makes someone more upside down the trade. That wound up short has not squeezed yet. What's lifting the market? Genuine bull buying. The shorts are holding on for dear life, waiting for, I don't know, Chicken Little to come running around telling you the sky is falling. And they're holding on and holding on and holding on. And the market is pressing them further and further and further upside down. Imagine what happens when those shorts start to liquidate starting this week over the next 3 months. I mean, that's just clear as day. Right. You said the options hedging structure is not static. It seems the monthly map forecast to be somewhat like a hurricane probability cone. I think I love the way that you said it, Ralph. That's great. Further out in time, the wider the predicted path. I guess with options, people don't naked buy options that far in advance. Typically, people are going to buy options over the period of their risk tolerance. So an example is, why would I buy options in September? Why would I buy put options in September? Not because I want to short the market. Nobody wants to speculate and hold and lose theta over 3 or 4 months speculating options. Traders don't do that. Options are typically part of a hedge for the most part. About puts in September, it's because I'm longing a stock between now and then, and that's the point I want to get out. And I did a calculation to say my stock now plus the anticipated dividend minus the cost of the puts minus the theta I'll lose from holding it should neutralize my trade, and any loss I should take should be fixed to what I want to lose. So typically, you gain a dividend, which is a certain amount of money per share, and you turn that around and buy an option with it, which is a certain amount of money per share. Typically, you hope to, cut into your options cost. You're buying insurance, and every day that option's out of the money, you're going to lose some of that premium, which is the cost of holding the option, right, from theta. And so you hope that your dividend covers all or most of that or some of that. And that's who's buying puts and who's buying calls. People that are short and buying calls to hedge as markets go up. And so the idea is that further out in time is just where people's positions are. And typically, the further out in time, the probability that they're speculative goes closer to 0. You wouldn't speculate by holding options 3 or 4 months in advance. Maybe some people would, but most of these trades are based, most of these are going to likely be hedges. Most, like, the closer you are to now, speculation is the highest probability. Speculation or market maker absorb money into their cash sweep vehicles so that they no longer go, or to buffer their cash sweep so they don't go negative on a trade. And so the further out and be long in case we're trading above 460, I just want to be long the stock market. And anytime it gets in there, I'm going to assign and go long. So further out, I'm saying more like instead of a probability, it's more like the further out in time really is showing you more of the sentiment. Because you're not having your day traders locking up more money. The further out in time you buy your option, the more expensive they are if you hold the delta the same or hold the price the same. So why would day traders lock up 3 times the cost of the option? If you're going to swing trade, which is what that actually is, you're just going to buy the underlying because you don't have to pay premiums and lose Greeks on that, right? So the further out in time, it's very highly probabilistic that these are all geared for assignment, which means they're options that will convert to the shares. Closer in time, you get a lot of speculation. Here's case in point, right? It gets very noisy in the middle, and it tends to clean out and be more stable further back in time. Further out in time you go. One may argue that these little one-offs in the middle are the speculative bets or last-minute hedges. And that's kind of our theory with that. Great discussion, though. Where'd my monthly map go? ChatGPT attracted 1 million users in 4 days. It's the fastest adoption of any technology in history of AI. Will contribute 15.7 trillion to global GDP by 2030. It might be more than a fad. It is absolutely more than a fad. Listen, the internet was a fad and still tripled the S&P between 1996 and 2000, when it was still a fad, right? When people didn't believe the internet was a big thing. Even if it was just a fad, the market could still triple. Think about it like this, right? Imagine your money manager right now, because you're 55 years old, you run your trading floor at some hotshot firm in New York, and you remember when you were, or you're 40 years old, you remember when you were 22 years old, fresh out of college, and you were that bear in the office that said, this internet thing is stupid, it's not going to take off, it's a bubble, and you missed out, and everyone laughed at your firm, and now you're the boss, and they got another once-in-a-lifetime trade dropped on your plate called AI, and AI is going to be in everything from your car to your fucking toaster. And now you're like, oh man, I'm smart enough to remember what happened last time. They laughed me out of my office because I said this internet thing was stupid and it's nerds. Nerds play the internet. It's not real. It's dumb. You can't do anything with it. These companies have no valuation. They're not selling anything. It's stupid. You tie up your phone line, like whatever, like dumb. And now you're like, okay, robots driving cars? Let's think about this. It's not only like a fad trade, it is a very probabilistic future. It is literally not only something that even in its quote unquote fad stage right now has immediate utility. Case in point, I don't make any of my Instagram videos. I got a robot making all that content you watch. I ain't even doing shit for impressions. That's the utility of it right now. Resilience at the half cap. So resilience starting to take a little bit of a dive here. Like, thank you for reminding me. Keep an eyeball on that. If resilience goes below 0, we're likely to pull back and sell. There's no true AI yet, only advanced chatbot. Exactly, right? And so the idea is that by, you know, sophistication, Google, was it, I don't know how many cores they have, like a 72 core quantum computer now. You guys know what quantum computers do, right? Imagine when those things take over. The quantum, like, okay, so computer, like, basically is like looking sequentially at a filing cabinet. Here's how computers work, right? Traditional microprocessors. Imagine you have a file folder, and you open that file folder, there's gonna be something inside of it, either a 1 or a 0, and you have infinite file folders inside of infinite file cabinets. A traditional microprocessor opens a file cabinet, pulls out a folder, says, is that a 1 or a 0? Okay, and then it writes it down. Pulls out the next folder, 0, pulls out the next folder, 1, pulls out the next folder, 0, etc. Quantum computer can look at all filing cabinets, all folders at exactly the same time. And not only that, you have superposition of bits. You have a 1, a 0, and then a superposition, which is both a 1 and 0 at the same time. It solves problems infinitely faster. I'm talking immeasurably faster. And quantum computing plus AI is the future of the world you live in. It's a scary future because the limitation of a current microprocessor is actually the reason why we're not living with Skynet robots blowing us up, because that's not really a smart computer. Quantum computing, however, in AI is, to me, the scary future. That sophistication. Imagine a computer that can design itself to evolve to overcome problems with that much processing power. Quantum entanglement. Einstein knew it. What's up? I think that's just a blip. We lost our connection earlier. Let's refresh this. The thing was spinning. That's not normal. Oh. I wonder if we lost the stream. Like basic, how many viewers does it say on y'all's end? My encoder just went from like 100 and something to like 40. Yeah, AI is just a marketing term. We know that. But the future of this is big. Yours shows where, yeah, it's weird. I think what happened was the stream was buffering for a while, and I think people just dropped off. That's so weird. Cool. Okay. All right. Well, maybe we should call it a mean reversion. I traded long up to bull zone, pulled it back, called it a day. I'm done. Pretty easy day. Not a big deal. Exited before consumer confidence, still sitting in the middle. Things look good. Okay, yeah, thanks for letting me know. I think people are starting to come back, but I saw that the stream was buffering for some odd reason. I blame my cats. Last thing. Got to work on getting futures going here. We're by today, I should be able to make my first futures trade. I'll probably do it in the Zoom call if we get it done. They said they're still working on it. I had connected my account, but it was still showing this test account. It's not really, it's just a test account, so it's not really ready to go yet. But I'm connected and logged in. Is there resources out there to teach about rocket scooter before you subscribe? They'll have any time for Discord and you travel a lot? Well, here's what it is. Mostly in Discord is just the place where we plan our videos. So you can just jump in and watch the video. As far as resources go, this is your resource. You can ask me, ask anyone here. Everybody, we have a LCG asking about rocket scooter. Do a quickie. Type in your favorite. Give me like a 1-sentence review of rocket scooter. I don't know. Say something good. Say something bad. Say something ugly. Let them know what you think. This is my best way of giving you resources. Let other people tell you their experience. Don't let me be a salesman and pitch something to you. Tell LCG who asked a question. If y'all can help answer that real quick before I bail out of here. And my one sentence is this. Whatever you do as a trader, you need the most information possible and the least amount of expense. You want to have as many tools as you need to get the job done and no more. The idea is that, you learn charting, you learn technical analysis, you get a bunch of tools that read a chart and price data, but you don't have tools that read risk, time, and positions. These are brand new tools that allow, like we were talking about earlier, how to look for where markets pivot in the future. This is a new tool set. Predicts where volume and positions will be at a point in time. Nothing to do with price, nothing to do with charting. So it's a whole different tool. It's like if traditional analysis was a screwdriver, we're a rotary saw. There's a specific application that you wouldn't use one for the other. And they're great because you need both of them if you're a carpenter. So showing you where large institutions are positioned is more important than you guessing if that news was bullish or bearish. They're literally telling you they're bullish because you can see how they're positioned. You don't have to guess. If you see where people are positioned, you see where the hedging's taking place, on the institutional side, it pulls the veil back on Wall Street. And so we're the first of its kind to reveal that to you. Case in point, we use that in many ways. Swing trading, investing, day trading. The information is useful. As a day trader, I'm using that information very, very easily as such. Liquidity map gives me some letters. Here's a guide of what the guide looks like. And not to like say I rubbed a crystal ball or anything, but I mean, does this look bull and bear zone? I mean, does this look, this is printed at 9:30 in the morning. And look what it's doing today. Does this make sense, LCG? Positional data is the newest, hottest thing, in my opinion, and all tech producers and providers are trying to chase something similar to what we've made because it's so next level at showing retail traders the truth of the market. Somebody said volume predictor and trade planner, never going back to traditional trading. If all these trading modules come through that Matt was talking about, everyone will be proficient in the actual platform use and be unstoppable. The clear thing is that the probability, now again, we take the assumption, here's the cool thing too, the assumption of technical analysis, and I'm gonna call it a day after I say this, is that you can use indicators and draw on a chart using the past price data. You can create some kind of correlation of that, like some average or something, that somehow is gonna predict where price changes in the future. So the audacity, who do you think you are, technical analysis, to say you can predict the stock market? I'm drawing some squiggly pink lines on your chart. The actual baseline premise of Rocket Scooter, believe it or not, is that you can't predict the stock market. We actually start there by reminding you in the very first moment you learn, not technical analysis, I'm going to use these crossing over averages to predict that the market's going to go higher because of past price data. We actually take the assumption that you can't predict price action, and then we built something around that. That was our limitation. You can't predict the stock market. So while this looks great, it does look like I predicted the stock market, doesn't, but this is a probability distribution. There's a high probability that that happens. No guarantee, but as a trader, I'm betting that something happens. Whether I bet from here to the middle or there to the middle, looks like both of them happen. There's a high probability that that happens. But again, we say that it's unpredictable. Some things have higher predictability than others, and we exploit them. So today I longed to the middle and closed out. I literally closed my position right here. When this green, I'm training a student right now. When this green candle came out, my student said, "Wouldn't you sell right there?" And I said, "Absolutely." And said, you know, we didn't see this green candle and go, "Ooh, I want to chase that long." I knew coming back to the middle, and so did my student. So the idea is that where does it go from here? I have no idea. It's random. But I'm exploiting a short-term price imbalance called a liquidity map. And this is something that we learned to use. And the positional data you can use on any time. In a day trading sense, this is fun. To me, it's useful because I no longer draw any overlay indicators on my chart. As a matter of fact, I never even changed the candle duration. Those are 2 revolutions for retail traders already. I don't have to look at 1 minute, 5 minute, 10 minute, hour, 6 hour daily chart anymore. I never change it from the 1 minute chart. So no longer do I have to have 65 monitors on my desk with 100,000 fucking neon colors, like it's red light district, burning holes in my retinas just to stare at one ticker, right? I don't have to sit there and overload my senses just to try to figure out what SPY's doing on multiple time frames. Never. I know what SPY's doing. Or I know where people are positioned in SPY, and that's really all I care about. And to be able to draw this all in like a 2-dimensional sense makes it a lot easier for traders. And now I don't have to go in there and study hundreds of thousands of indicators and figure out which ones I like and trial and error practice them. I mean, look, this is how stupid trading's gotten. Technical analysis, we're using TradingView's charting library. It's the best charting library in the world. But this motherfucker's got emojis in it. Look at my screen, emojis. This is how stupid retail trading stuff has gotten. You need a fucking emoji on your chart to help you understand what's going on in the market. This is how dumb it's gotten over the years. People just run out of things. Let's add emojis to the chart. I mean, I did the Gantt levels and the Venn diagrams and the Fibonacci's, and you know what I need? I need the poop icon just in the middle so I can make sure I know what's going on. I mean, I guess people just missed sitting on their living room floor as a child and coloring books. I don't know. But at the end of the day, this is built in the standard library. It's ridiculousness, right? Traders will find any reason to try to curve fit something into existence. And instead, you know, as engineers, we went to the baseline of, okay, you know what? Stock market's pretty unpredictable. What is predictable? Well, people they report their active positions to government entities. This is Commander Traders, and these are S&P futures. This is reportable positions. And it literally, you can read this in a linear fashion. Let's start. Asset managers and institutional, green line is becoming more and more net long over time. Everyone in this category is buying more and more and more over the weeks. That's interesting. And the market's going up more and more and more over the weeks. Wait, people report their positions. That's very powerful information. Clearly, as people are buying more and more, markets go up. Here's another thing. People are buying more and more and more. Markets are going up. Oh, that's cool. I wish I had positional data that did an update once a week. I wish I had positional data that updated every single day. Shit, that's very valuable. Check this out. People are shorting very heavily, but it doesn't matter because as long as people are buying, markets always go up. That's your basic principles of supply and demand, right? And this CFTC report comes out once a week, and it's a week-old data, which is okay. It tells a good history, but man, it would be cool to have positional data every single day, and we figured out a way to do that by using options. If I sold a call and a call goes in the money, the person that bought that call from me might exercise that position, might not. If I think like a risk manager, I'm gonna have to long 100 shares for every call I sold, just because the probability is high that that person assigns me the position. I have to go out there and buy. So I'm going to choose when I buy, and I make sure I buy the best for me, which means sooner rather than later. So the idea that options go in and out of the money force option sellers to long the market and sell the market. So that forced hand trading is what you're experiencing. Since American style options don't exercise when they strike in the money, don't exercise on expiration date only, like European style options, American options have this one very cool fact. And that very cool fact is they can be exercised upon at any point in time. If I buy Friday expiring calls in European stock market, European style options, if they're in the money, it doesn't matter. They only realize that risk when they expire. Then I got to go out there and do something. I can hedge along the way if I want, but the risk of assignment isn't there until the very last moment in time. American style options, assignment means the option's exercised and you're forced into the position if you sold the option. You're like sitting on edge. At any point in time, someone can rip the cord and force you to buy. So therefore, the moment those options go in the money, you're likely immediately going to squash your risk and hedge out. American style options have the ability for you to exploit that idea. And the exploiting of that idea is how we can draw liquidity maps that seem to be fairly accurate. And the accuracy is not because the market's predictable, it's because that behavior is predictable. The minute somebody faces risks, they're going to go out there and hedge it to neutral immediately. And that creates those pressure waves we exploit, simply as drawing lines on a chart. And you can see exactly what I've drawn, exactly what you see that matches the letters here. And each particular setup is just a balancing act of those options going in and out of the money. And you can trade off of them, swing off of them, hedge off of them, whatever. That's Rocket Scooter in a nutshell. Any questions? It gets cooler when you go through the videos, but this is a true, tried and true exploit. This is not even an exploit. This is just categorizing and cataloging the net sum of everybody's risk of these positions. Now, the way we identify them is obviously top secret. You put some very smart mathematicians on this. It wasn't a hard problem to figure out. It's unique and it's very clever how we did it, but it adds a layer to your analysis that doesn't currently exist, which is seeing where that hedging and those positions are. And it's great for any style of trade. Imagine this, right? Imagine, I'm gonna get out here in just a second. Day trading, I long from here to the middle, call of the day. Market could do one of a million things, but I know that there is some pressure from here towards the middle. That may not be the market direction, but I know there is pressure pushing that way. Market could do one of a million things. We had an event today, consumer confidence number came out. So the way I do is I avoid events because they're random. I take a bet from here to here, use a stop loss, and then I can decide if I want to make a trade or not. I'm going to bet that the market's going to be quiet. Nothing's going to happen. It's just going to ride along that little pressure wave. And then that's it. If you were selling options, if you were a trader that dealt in like short-term swing trades and options, maybe you can you could buy puts, sell puts down in here, sell calls, buy calls up in here. You can initiate, like we said, any kind of trades, iron condors, vertical credit spreads, anything to bet that this pressure pushes down, this pressure pushes up, and then the market just kind of floats in the middle. And then you can maybe, in this particular case, these are called vertical credit spreads. You can buy a vertical credit spread, and all of a sudden, you are inside of a trade where you're just making premium on both sides of the market. Today's a day that's probably not going to rally. It's likely to hug the middle. Okay, let me sell puts and sell calls for credit spread, for profit, both sides. So people get really clever in how they use this information. We train you in all kind of ways to do it. If you're trading, like I said, one of the things you can do, LCG, as life goes on. Monthly map is a way to use the same kind of technology to forecast positional changes in the future. We talked about that this morning. I can see that bull side, where I'm just drawing this orange line, it's bull side above here. It's getting, at a current price, you see the volume under the curve? There's more bulls over time. Right? There's more calls in the money, which means there's more bulls over time. Do you remember the first thing I showed you? What happens when there's more bulls over time? Price goes up. So this weak data points in the S&P futures prove that case. More and more longs over time, markets go up. Well, you've got more and more bulls over time. Just option sellers alone in the equities market also pushing the market higher. So this options effect is also going to create a bullish wave as well. So as an investor, say that I was going to work. Now, again, this is not investment advice, but say that I'm sitting there at work and I'm still an engineer and I work at the plant and all my buddies are sitting there, and you know, everyone thinks they're smart stock markets. Everyone's got something to say about it. You're at the water cooler making your coffee. Your buddy's like, "Oh, bro, dude, it's like recession. I was watching CNBC. Jim Cramer said it's a rally. I'm gonna short it. It's gotta crash, man. QT." And you're like, you know, he's like, "Yeah, I just dumped my 401k, man. I put it in cash. I'm on the sidelines. You know what? I'd see this and say, I'm holding on." I can't predict the stock market, but I see there's still bulls until October, and there's more of them. Well, I'm gonna go ahead and hang on. I'm not gonna panic yet. I'm a calm, cool, collected attitude in the market. And I'm not doing anything special other than seeing where Wall Street is also positioned over time. Do I do strangles? So I personally haven't done any day trading of options most of this year. I've been mostly making all of my trades in futures. But as soon as we have the ability to do so, I'm going to do some options trading as well. To demonstrate I'm rock suitor. I'm not primarily an options trader for the sole reason of I don't like paying short-term capital gains tax. I like the 60-40 rule in futures. Uncle Sam takes less of your money dollar for dollar when you make your gains day trading futures. It's the bread and butter of any day trader that's trying to make a little money. Day trading to pay your salary will always ultimately end up in futures once they become profitable. Because you're effectively 20% extra money not taken from you due to taxes. So the reason I'm not focusing on day trading options, I know it's a popular thing to do, is because of that particular reason. But I still demonstrate it time to time. Why trade options then, people ask, right? There are certain times when options are great. Options are geared towards slower trades, smaller gains. When people use them as lottery instruments, which I think is silly. Which I like Ashton trades. He's very smart at trading options. He does medium-term swings. His risk is defined. You can make a pretty decent, slower gain. It's faster than trading the stock straight up. It's slower than trading futures. It's geared towards medium-term, slower trades. You can have a more complex trade setup by structuring an options trade very complicated, like. So you get a lot more flexibility. So it's better, like if I wanted to swing trade the S&P and I want to be a bull, I'm not going to just long futures. That's very risky if it goes against me. I might structure an options trade. Cost me more in taxes, less risk. Defined gain, and it's a little bit more structure, and it's going to have more alpha than buying the stock straight up. So it's kind of like an even middle ground that you can use for swing trading. Speculating options, I don't know. It just never was my thing. I'd rather just day trade in futures. And taxes was the reason for that, but yeah. Oh yeah, SPX options. Oh yeah. you have any more questions? I'm gonna get out. Plus, Matt is working hard to add features. Oh, LCG. Ralph says, still undecided, not a fanboy, not a cynic, bought a year because I knew it would take more time, 3 months to learn. Plus, Matt is working hard to add features. Think the foundational concepts are sound, but the educational materials need to be edited and restructured. Yeah, and that is one of the biggest things that we listen to. And one of the challenges we face with that, just to be honest, is that the platform is evolving so fast. Imagine filming 50 videos and then the platform gets a new feature. Imagine 50 videos that you film that show, okay, guys, here's a liquidity map. Go to Discord, open your liquidity map. Here it is. Well, we've since changed the liquidity map since all those videos were formed. And now we put the liquidity map in the platform. All those videos rapidly become obsolete when we add new features. Right? People are going to be like, wait, where's that liquidity map? Where's that thing? All videos now are going to be like, look, here's your liquidity map. Here it is. This is what it does. And so we evolve faster than we can make content. And that's one of the things. We make a video or two a day. We keep circling back around and refilming the old content as the platform evolves and becomes the vehicle. A year ago, most of the training was done in Thinkorswim, even though we had our platform. I was always referring to Thinkorswim, and now all of our training, once we have futures data, we're gonna refilm all the videos for you, Ralph. This is what we call the final stopping point, the stopgap. As soon as futures data is live, and as soon as we get all of the rest of the tools automated in the platform, I'm redoing all the videos from scratch. We're going to go through from start to finish like a brand new boot camp. So I invite everybody to come to that. It'll be like a month or so worth of stuff, and we're going to restructure everything, and then we're going to put all those videos finally on the website. The reason we haven't taken that effort, because we know we'd have to change. Imagine like when I start teaching futures, and I always got to bring Thinkorswim up still because we don't have futures data yet. So as Ralph has nailed it on the head, one of the things is that as our technology is evolving, our educational material has to evolve with it. And we're working. Yeah, dude, I'm always on for FOMC. So tomorrow, I stream in the morning, take a break, then we'll be on live for FOMC for sure. You've seen improvements in the last 2 months. Oh yeah, you can thank my team, Ashton, and then especially Nicole for that. They've both been like yelling at me to make the educational material better because they were both going through the videos too, just to learn, just to see. And the stuff they're telling me is really good feedback. Just so don't stop giving me feedback on that. We love you guys. But once we get everything automated, it's gonna be it's gonna be easy from that point forward to make some static content that doesn't change. The Pro platform, which is what you see. The Pro platform will be anchored. All future upgrades will be Pro Plus. So all the educational material for the 3-month trial will be for the Pro platform. And LCG, $35 a month just covers your data feeds, and the platform's free basically. So for $35 a month for 3 months, just do the extended trial on the website. You can get 3 months, just dive in at your leisure, cancel anytime. It's only $200 a month for the sub. So you can just check out the platform, just play with it for 3 months and learn everything at your leisure. We made it pretty much like that so everybody can just kind of jump in and play with it. Okay. That's it today. Mean reversion trade, long the middle. Not too bad, not too bad. Looking good, everybody. So remember, Google, Microsoft, Visa earnings today after market. Be very careful on that. Obviously, we have FOMC tomorrow. Always a big day for FOMC. All right. All right, everybody. He's saying, definitely experiencing rocket skier, but taking time to learn everything, especially challenging, is unlearning technical analysis. Your brain wants convergence, and that's misleading. That's the thing. Technical analysis is great, but the one thing that we learned with it is that adding more indicators give more information. And so the idea is untangling that idea. And yes, adding more tools gives more information. But to me, technical analysis and indicators, adding 3, 4, 5, 10, 20, it's not giving you anything new. It's like giving you the same thing in a slightly different light. So adding like 1 or 2 indicators that you think are strong to something completely different based on options on top of it is the stronger confluence. So like people using a couple of cool, really good technical indicators, maybe 1 or 2 max, and then adding rocket scooter to it to see positional data in the same chart. It's kind of the ultimate goal. You don't have to completely throw TA out. You know, I did, but that's just because, you know, I learned I didn't need it. But it doesn't mean it's bad. It's good. It's just is that unlearning that idea of, yeah, confluence between like 20 things and always like looking at all kind of stuff or signals. I mean, you feel like it was such a busy thing. Like, okay, here's a signal, Where do I look? This thing, new chart. And it was just, this is patience. Like, this is me waiting. And having a signal from TA and using Rocket Scooter as a layer of confluence with that is very powerful. So that's where we want people to understand is that you don't have to completely like abandon everything you know. You can just use a traditional indicator and say, okay, here's my normal signal. Okay, my normal signal right here. So you have a normal signal right now, and whatever it is, your indicator is like, okay, a crossover. This is normally my buy signal. Okay, so let's go and see what does Rocket Scooter say on top of that. Well, DD is 84. Okay, so what does that mean? Well, we have these tools here that say if DD is greater than 1/2 and you're in the middle, the tie break is more likely to the upside than the downside. Oh, great. So I had a buy signal. So maybe, and again, this is hypothetical. So this isn't a buy signal. I'm just making something up right now. But you would say, oh, okay, they have this thing that says if we're in between these two, it more likely goes up than down, which is cool because I was looking for a long signal too. And so the idea is just like true confluence to kind of go with additional tools and techniques. So anyways, I'm going to call it a day, you guys. I'm going to take a quick break and we'll see y'all later. Thanks for tuning in. Zoom call at noon every day like we always do. And we'll teach you a few more things. Thanks for checking out Rocket Scooter. Join the extended trial. Check it out for yourself. 3 months, $35 a month. Pretty easy to jump in and get a look at it. Feel free to tell everybody you know. We're growing really fast, and we love the support, appreciation for what it is we're building. We're gonna keep building new stuff as the years go by. Noon Central.